Hi, this is Mike Ward. I am in this video going to take you through how to interpret the feedback that you get at the end of each decision of your business simulation. Now to do that, I'm going to just show you, we're going to look at the feedback that we've had after the first 3 decisions which I made on your behalf to set the game up. Now you will have a copy of this business management exercise in your ClickUp folder, and I want you to find that. Make sure you've got it, open it up. You might want to just push pause until you've done that. When you've done it, go to page 13. Right, so I am just getting myself to page 13 here, and you can see on page 13 we have got this decision form. So this is just a copy of what the Excel spreadsheet looks like, where you will send in your decision to me and I will process this. I'm going to cover this sheet in my next video. Now, if you scroll down, you're going to see that page 14 has got the operating summary for year 1, quarter 3. So this is where we are sitting at the moment. This is the kind of feedback that you are going to get. So we're in year 1, quarter 3. You can see that here. And you can also see that this relates to company X over here. All 5 companies are exactly the same. So normally you're going to see company A, B, C, D, E here. But at the moment, I'll just call it X because everybody is the same. Now what you're going to observe from here is that this is our operating summary here. You can see operating summary over here. And first of all, we're going to be looking at the factory. And there's 2 sides to the factory. There is the material side of the factory. This is raw materials. And I want to start with that. Now, what happened was, initially in year 1, quarter 1, I ordered 700 units from Australia of raw materials for your factory. I did the same in quarter 2 and the same in quarter 3. Now, and you need to keep on ordering every single quarter raw materials or you will run out at some stage. Now, what actually happened was you can see here delivered in quarter 3 were not 700 but actually only 560. That's because the Australians didn't fully send us what we'd asked for, and you will notice at the bottom here it says that 140 units have been placed on back order. So we would expect those to now arrive next quarter, and you can see that this number here awaited, which means they've been shipped in at sea, is 840. That represents the 700 that I ordered in the second quarter plus the 140 that weren't delivered. Now, so what happened was 560 were delivered, and we had therefore available to issue to the factory 560. What we actually did was we issued 500 to the factory over here, which left us with closing stock of 60 over here. Now, in the factory here, this is where the factory is over here. It's called the finished product over here. You'll see that we first of all got plans. This is our planning that we just set up the quarter before. Next quarter we're planning to make 500 units. And this line here is what's important. It stands for work in progress. This is what was being built in the factory in year 1, quarter 3. 500 units were being built. Now, this is available for you to sell now in year 1, quarter 4, which is your first decision. This will be available for you to sell. So normally what you'll be able to do is look at the sheet and you'll be able to see what is currently being made in the factory, and if there's any closing stock at the bottom here, stuff you haven't yet sold, you will be able to add that to this number over here, and that will tell you how many units you have got to sell in the forthcoming quarter, the next quarter. So that's what's happening in the factory. Also on this sheet is some information about your salespeople personnel. And you're going to see it's kind of split up. Now let me go straight to the bottom here because this is the key number down here. Can you see here? And you should highlight this every time. Just go straight to this sheet and look at the bottom here, and it's going to tell you number of salespeople available is 16. Now the computer is calculating how many people you hired, when you hired them, who's in training, who is out of training, how many have resigned, and how many of you retrenched, etc. And it gets it right, and it tells you that there's 16 people available. Now let me explain this a little more. In year one, quarter one, I actually hired you 16 trainees, and it showed up on the form. You can't see it now because we're in quarter three, but as trainees, it showed 16 people had signed up. Now, unfortunately, in the last quarter, year one, quarter two, two of those guys resigned during training. And so last quarter, I hired 2 more experts, and you can see them there. And they are now available as well. So it's taken our contingent up to 16 again. So you've got 16 people that you can allocate. So you want to keep your eye on this section over here. This is just telling you the number of resignations at the end of this last quarter. You can see nobody resigned at the end of quarter three. But you will get resignations, and I strongly advise you to plan on hiring more people every single quarter. So that's what this page, this sheet tells you about. Let's scroll down and have a look at the next page. Here we've got our financial statements over here. And you can see once again, this is year one, quarter three, and we are looking at company X again over here. Now, I want to start on this side over here where we've got the cash flows. And at the moment, you can see the opening cash is £866,000. And at the bottom somewhere over here, you're going to see that nothing came in. Sorry, you can see that up here where it says inflows. There were no inflows because we're not selling anything yet here. And so the cash available is the same as what it was up here. Now, in the quarter three, we had certain outflows. We were paying for people to be trained. That's what that is over there. We were also working in the factory. We had to pay production costs over there. We also had certain overheads, and you will recall that the factory's got overheads. The factory overheads were actually 30,000, and then we've also got the sales overheads. These are the admin people in the your office, and those are 40,000 every quarter. So you're going to see those things coming through. There were no other costs in the last quarter because we weren't really selling anything. But you can expect when you start running the company in quarter four that you will spend some money on advertising. I want you to buy some information. This is going to cost you 40,000. You are also going to be incurring R&D costs here. This is going to be 30,000 here on R&D costs over here. So I can't get there. There will also be some costs for materials and maybe some other costs down here. If you spend money on buying another line, that's going to come through here as a cash flow. So all of these cash flows here either go through onto the income statement here, which is called a profit and loss account over here. You can see there's 0 revenues. Do you see that? That's simply because we're not selling at the moment. But you would expect next quarter when you sell, you're going to see some revenue coming through. So whilst there are no revenues, there are some costs. That's because we are already training people. And so this 80,000 that you're seeing here is actually made up of the 40,000 from your sales personnel over here. So I can't get it. That 40,000 over there. And part of the works overheads is going into an expense. The rest of it is going onto the balance sheet, as you'll see just now. So we made a loss last quarter. That's okay because we didn't have any revenue. But hopefully you're going to start making profits. And you will be observing this line here in the income statement here. This is where you're going to focus here. It's going to tell you what profit or loss you made each quarter. At the bottom on the right here, you can see the balance sheet. This is telling you what's happened to your assets. And so you can see, first of all, we've got cash. And this is at the end of the quarter, we've got 746,000. That is the same as the closing cash figure up above here. Must be. In addition, we've got some inventory. This is raw materials. We've got some work in progress. That's what's happening. The value of the goods that are sitting in the factory. This is the value of the factory itself, the 500,000 that we spent. And you will observe that our total assets has gone down. It's sitting it started, remember, at 1.5 million. That's what we put into the company. But we have cumulatively lost 214,000. That's me starting your business. I had to spend money to get the business going. And so that difference here is what is reflected here in our net assets over here. So your job is to keep a look out on this sheet to try and understand it. In particular, you need to watch this cash line over here. This can never go negative, the cash. If it's below 10,000, it means that you've got an emergency loan from the bank, because that's what happens. It'll never go negative. You can't have negative cash. It translates that into an emergency loan. So you want to watch that. So keep an eye on your cash and keep an eye on your profit. Make sure you are making profit and try to understand what's going on here. Then the last thing I want to show you here, and this particular sheet I'm going to charge you £40,000 for, and you've got the information here. This information is up to date and real. And what this is it is the full market report. Okay, so it's giving us the market potentials for each of the 16 territories. And so if you study this report here, you're going to see, for example, that here we've got year 1, quarter 4. Okay, that's the next quarter. And then we've also got on the same sheet year 2, quarter 1. And we've got this information for territories 1, 2, 3, 4, and 5, and all the way down at the bottom here for territories 14, 15, and 16. So, for example, you can see that, just looking through this, the worst territory to be in next quarter is going to be territory 12. I hope you can see that, because the market potential for that territory is only 50. There are only 50 people interested in buying your product in that territory. The very best territory to be in is actually going to be, looks like territory 16. You see that down here. 840 people want to be there. So you've got to keep your eye on this sheet. In year 2, quarter 1, you can see that the numbers have changed. Territory 12 is looking a lot better. Okay, it's gone up to 150. And it's still pretty bad though. It's not. It still looks like it's about the worst. Okay, so these numbers are going to change as we go through the exercise. On average, their numbers are going to go up because we're expecting the potential to grow. But you need to keep your eye on this sheet to decide where to put your people and where to spend your advertising. I hope you find that helpful. You might want to also make sure you watch the video on how to complete the decision form. Thank you very much.